Welcome back everybody, Sive here with the Forex Peace Army.com. Let's keep up with the analysis of the gold market. So in the weekend we talked about the 50-40 target and considered some intraday patterns including the wedge and explained in details why actually it might be upside breakout. Although it has happened really the upward breakout, but in the current situation this is not the result of the technical analysis. This is just external factor when the United States has promised to support Bank of Japan in their intervention in holding the yen weakness. Automatically it means that dollar should become weaker just because United States will have to print dollars to buy the yens. Nobody knows at what degree it might happen, what amount of yen United States intends to buy to support. But the same precedent we already know. This has happened in Argentina, where the actually to support the peso, United States just has transferred some amount of cash to support it. And in Japan it might be something like this, but with a different scale, significantly larger scale. And that potentially, at least based on the sentiment, led to a drop of United States dollar. And that's why we see the gap opening on Monday on all currencies, on gold. But this effect was not really long term. So in this moment, gold remains on the top and remains at the daily overbought and then the weekly overbought. And I wouldn't treat the current actions as a breakout of the 1540. A 1540 is a yearly pivot point. It is more like the range. So market could spend some time around it. You could see, for example, what has happened last year on Bitcoin, where we closely were watching the pivot points, and you could see what the type of the performance might be around the pivot points. It might be really wide around it for a considerable period of time, and actually not necessarily that reaction has to happen immediately, especially when you talked about the yearly pivot points. But at the same time, 50-40 is acting like some magnet area where it's attract price, and here definitely should be some price reaction at this level. So I would say in the current moment that market stands around the yearly pivot resistance one. On the daily chart, I don't have anything new, so actually we have the same thrust, and we said if at some day we will get the pullback, that might be interesting to consider momentum trade here, bullish momentum trade, and taking position in some support area. This situation remains. The only thing that we could add is that actually today's session is inside one. So you can see the market stands inside of the Monday performance. On the 4 time frame chart, as we said, that wedge might be the upside continuation pattern. That has happened. As you can see, market breaks it up, then close the gap with this more down and return it back up. In the current situation, guys, we're mostly stands here in the same environment as on the euro currency that we discussed today. So the major thing that we need to know is what actually is this. So if market will keep going sideways and forming some sideways consolidation, keeping weekly lows intact, I don't know, maybe triangle, maybe some flag consolidation is forming, that's the one story. In this case, we should be ready for a possible upward action. If instead we see that market is breaking lows, forming something like double top, or maybe some different pattern might be formed, we could get deeper retracement out of this channel. But at the current moment, we can't say that definitely. We don't have any clear patterns. And currently market stands at overbought. Definitely not the best combination to consider taking any new longs. So probably we will need to give market 1-2 days credit and actually see what will happen, what the patterns might be, what the consolidation maybe will happen, something like this. So to get some clarity. That's our view currently on the gold market.